Good afternoon, ladies and gentlemen. So we're going to get right into this one today. We have Fred Krueger on the show today. Want to be mindful of his time. If it's your first time listening, this is the Bitcoin Show podcast where we discuss all things Bitcoin, macro, and just about everything in between every Tuesday, 2 p.m. Eastern time. I just wanted to give a big shout out to Leather Wallet, the partner for today's show. Leather is the Bitcoin wallet creating a bridge between the Bitcoin network and emerging layer 2 solutions. So Leather is absolutely your go-to self-custodied, open source, and audited Bitcoin wallet, allowing its users to secure and manage Bitcoin, ordinals, stacks, L2, and other Bitcoin secured assets like BRC20 tokens. Leather is Bitcoin for the rest of us. For more information or to create your wallet today, go to leather.io. So ladies and gentlemen, as I just mentioned, we have Fred Krueger on the show. Fred, I want to give you a chance to give a little intro to the audience that might not know you. My understanding is you're a guy that was working on Wall Street in the 80s and early 90s. You have your PhD in math from Stanford. Incredibly impressive. I was briefly a mathematics major in college, so I understand how challenging that actually is. And you ended up having 10 exits, like entrepreneurial exits of companies that you made after your Wall Street stint. And now you're generous enough with your time to post very, very thorough, thought out, and just very prolific Bitcoin analysis to Twitter on a near daily basis, it seems like. Do I have that kind of right?
Yeah, that's about right. Yeah. Yeah. So I have a kind of a unique background from a Bitcoiner's perspective, right? Because a lot of the people on your show are going to be very well versed in kind of the history of Bitcoin and so on, but they're not going to be so well versed in kind of the history of Wall Street and securitization and so on, right? So I kind of come from both worlds, and I think that about a month and a half ago, I realized that, first of all, I think thought that the ETF, if it happens, if Gary Gensler would approve it, would be an absolute game changer. And second thing I realized is, oh my God, nobody in the Bitcoin world has any idea of what this means. So I started posting videos on kind of what I really thought it meant. And I also believe, by the way, that all my friends on Wall Street also don't really understand the extent of what Bitcoin means or why it's any different from any other ETF, right? So I think that, my view is I can add something to the discussion by kind of bridging both of these worlds, right? And that's why I think I have a somewhat unique experience to bring to the table.
It's a similar experience to Max Kaiser, and I see you quote tweeting, some of Max Kaiser's tweets as well. I don't know if you see him as like kind of a kindred spirit in that regard. I'd like to talk about the ETFs in general, maybe just starting from ETFs broadly speaking, like not just the Bitcoin ETF, because you had a tweet that said it's not just the Bitcoin ETF, it's ETFs in general are eating the financial world. Can you, kind of go into detail on what you mean by that thought?
Right. So let's go back first 50 years. Okay. And,
sure.
how was kind of stocks done in kind of my dad's day, right? And actually early in my career, right? Well, you'd have brokers, right? You would call your broker and your broker would execute the trade. Then you'd pick up the Wall Street Journal and you'd look down and you'd see how your stock traded that day, right?
Yeah.
That was the thing. That sort of changed with the advent of discount brokers, kind of Schwab being the first one, really, and then mutual funds with Fidelity and so on, and then the next phase of this was index funds, right? Yeah. So Vanguard kind of said, "Hey, we're gonna buy all 500 S&P stocks in one shot, and super low fees. You're going to buy everything." Now, and that was in the 70s that really came out, the index funds. They really gained traction right around 2000. But the other thing that gained traction right around 2000 was ETFs, exchange traded funds, right? And ETFs as an instrument had about $300 billion in 20 years ago, in 2004, right? It was about a $300 billion kind of asset class. Well, right now it's about a $10 trillion asset class.
Unreal.
So it's not just that, this is just a large amount and it's always been a large amount. No. This is a large amount growing very, very, very rapidly, right? And it's growing in 2021. ETFs alone grew by $1 trillion. So there was $1 trillion of inflows into ETFs, right?
So over 10% growth year over year that year.
Let's see. Yeah, that year it was, and it was the year of COVID, right? So
Big
basically, and that's really kind of when Wall Street started really paying attention to ETFs, right? And and it's still going to grow, right? So the estimates are it's going to go from 10 trillion to 20 trillion in the next, decade, right? Or next 5 years even, you know what I mean? So this is on a huge growth trajectory of its own. And what is it displacing? Well, it's displacing mutual funds, right? Which are, you're paying some manager 1% to do something, right? It's also it's just displacing all kind of funds, whether it's a mutual fund, a closed-end fund, some guy who's recommending stuff, who's managing your money. All these things are getting disrupted by ETFs. And that's kind of where we find ourselves in 2024. And this Bitcoin ETF is just the last of many, 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 many ETFs, right?
And
so,
oh, go ahead. Sorry.
Yeah, no, that's it. It's just the most recent. So, I think, I sort of view myself now as, I've been converted by the Bloomberg guys, Eric and James. And, I had a chance to meet Eric at the Bloomberg offices in LA. And, look, he's got a great book out. He's got several books, but The Bogle Effect is a great book on Vanguard, and it covers somewhat the ETFs. But basically, this ETFization of the world is, ETFs are eating the world, right? And BlackRock is leading this charge of ETFs eating the world. So why are they eating the world? Because they're super secure, right? There've been no problems with ETFs, over those 20 years. They're just growing, no problems, secure, et cetera. Very tax efficient, right? And this is something that people don't realize, that if you have a mutual fund, the mutual fund could throw off taxes to you, even though you weren't there to get the benefit of those taxes, right? So ETFs, on the other hand, it's completely tax efficient, right? So if you hold an ETF for longer than a year, you've got long-term capital gains, and you don't have to worry about it, right?
Super clean, low fee in most cases, right? And
right.
we can talk about Bitcoin
and super low fee, right? Super low fee. So we're talking about 20 basis points versus 1% for managed. Your typical managed account was sort of 1%, right? Your Fidelity, Magellan. Now there's pressure on these fees is relentless, right? But now with these ETFs, you can own whatever you want, whatever flavor you want of these things. If you want to own pure Bitcoin now, you can own it. If you want to own leveraged Bitcoin, you're going to be able to own that. If you want to own, some kind of an option strategy that pays you yield, you'll be able to own that. But it's just a great vehicle. It's a great wrapper in which to own the asset, right?
Absolutely.
And that's like the key thing.
Yeah, and I want to jump ahead a tiny bit to Bitcoin. So you describe yourself as a Bitcoin quasi-maximalist. You post a ton of information on Bitcoin every day, and you post about these ETFs, and you talk about IBIT, BlackRock's ETF, and you're really paying close attention to the ETFs right now. Do you see a world where, for a long time, people were like, you can't outperform the S&P 500. If you just dollar cost average into SPY, or you're bringing up Vanguard, so maybe VOO, that's going to outperform the market. Do you think that mentality will be replaced by dollar cost averaging into Bitcoin for the long term? Like, do you see Bitcoin kind of taking the #1 spot?
Well, yeah, but potentially. So this is, first of all, I'm not necessarily a believer in indexing. Okay. And I kind of posted about this at one point, because indexing has worked for the United States over the last 20 years, right? There's no doubt. You bought the S&P in 2000, you're up 7 times. Okay. great. And not only you're up 7 times, but you're up on a very, very kind of steady trajectory, up 7. You had this little blip down, which was very painful in the great financial crisis, right?
Oh, 09.
But it was very quick, right? 09, we kind of recovered quickly, and then it was just straight up, right? So if you contrast that with the graph of Bitcoin, it's a lot cleaner, right? So most kind of TradFi investors are like, why do I need Bitcoin, right? I mean, my portfolio just goes up like this, straight line. That's their experience, especially over the last 10 years, right? That's absolutely their experience, just straight line up, right? So on the other hand, if you look at a Japanese investor, for example, it was a straight line up from 1970 to 1990. Then it was a straight line down from 1990 to about 2005. And now it's sort of climbing back, but it's just a horrible experience, right?
Yeah.
So indexing in general doesn't work. It's indexing to the right asset in the right time works, right?
Yeah.
And I think basically, the US stock market, that was the right asset in the right time for the last 2 decades. No doubt. No doubt, right? It doesn't mean that it's going to be the right asset for the next 2 decades, right? I definitely think Bitcoin is going to be a much better asset to hold than large cap US stocks over the next 10 years. No doubt, So, and I think Wall Street will adapt, right? They're not going to hold on to a loser. If Bitcoin starts really outperforming, they'll embrace Bitcoin now that they have an opportunity to buy Bitcoin. It's just another ETF now, right? So, I think Wall Street is nothing but efficient, right? That's what it is, right? It's super, super efficient. And if Bitcoin starts going on a rampage, people are going to jump on board the train. That's really the way it will work. And they haven't had an opportunity to do this up until now, right? That's the key point. It doesn't mean that they will, right? It's not like there's this flood of money that's just dying to get into Bitcoin, right? Because as I said, the money's pretty happy right now in U.S. large cap stocks and FANGs, right? Very happy. And you can even make the case that bonds are going to do pretty well over the next year if the Fed actually cuts interest rates. You could have a boom in bonds. So the 60-40 portfolio is in pretty good shape right here, right? So they're not sitting there going, we need Bitcoin. No. But if Bitcoin starts kind of outperforming, if it's that kind of, as Eric from Bloomberg said, it's the hot stuff, right? Then people are going to be like, okay, I need a little bit of that stuff in my portfolio, right? I don't want to go completely crazy. I don't necessarily want to go 20% Bitcoin, right? But, I might go and add 1 to 2 to 3 to 5% of Bitcoin. In the same way that somebody said, I might add 1 to 2 to 3 to 5% of ARK, which owns Bitcoin, Tesla, and all these other things, right?
Yep.
So that's kind of the way I see, realistically, that's what we can expect out of Wall Street. But that's an enormous amount, right? If we can get the average stock market trader, portfolio to be like, yeah, you kind of need to get 1% of Bitcoin, we're done. That's all we need, right?
And when we had James Safer, I think you mentioned, when you say James from Bloomberg, you're talking about James Safer. We had him on our morning podcast. He said that he expected 1 to 2%, like you're talking about. And he said he views that as a huge victory over just an incredibly bullish scenario over the next 18 months. Right. And that's what people, I think, aren't realizing. Do you have any insight into maybe what you would expect Middle Eastern sovereign funds to kind of, how they might approach Bitcoin? Max Kaiser talks a lot about, the Middle East getting involved with Bitcoin. You've heard some sort of celebrity investors like Kevin O'Leary talk about it. Has the oil money come yet? And do you expect it to?
I'll tell you what, I'm headed to Dubai tomorrow.
Okay. So it's timely. Okay.
Just sort of randomly. So I'll have a better view of that tomorrow. I mean, over the next week. Because I'm headed to actually Satoshi Roundtable tomorrow, right? And I have no visibility on what these guys are thinking or not. I tell you, I have raised money in the past from Saudi investors, right? So I'm familiar with the investor a little bit. And, you know, they've been burned many times before. They've also made a lot of money on certain things, right? So they're not total anti-tech trends, but, you know, I feel like they'll get on board if we start seeing a big bull market and they can get and they feel it's right, they could get on board. So I definitely think they're not going to be the ones leading the charge, but I think that they absolutely could get on board once the trend is clear. So I view them more as kind of like a booster rocket rather than,
Sure, gasoline on the fire, but they're not going to start the fire.
That's kind of what I think, right? I would not expect them to be the first movers on this thing, but I posted sort of just a little bit tongue in cheek. I said, if you look at the price of Bitcoin divided by the price of crude, which you can get, on TradingView, there's a pair, which is WTI to BTC.
Mm-hmm.
You might want to pull that up. It's a pretty interesting pair. Yeah. So you can see this thing has lost 88% of its value.
Yeah.
Since 2000, right? Which makes sense, because oil has gone nowhere and Bitcoin's rallied from, uh, about 7,000, in the beginning, right, of 2000. So, and oil's down, right? So, yeah. I think they have there's a case to be made that they should be moving some of their money from fossil fuel energy to financial energy. I think that's a logical trade for them, and I think once the dam is started, I think we will see some of that. So
sure, appreciate the
makes sense.
insight. And I'll be curious to see what your tweets look like after the trip to Dubai, if they change at all. One question. So right when, we had the ETFs actually finally, start trading, Larry Fink, from BlackRock it almost seemed like he immediately shifted to beating the Ethereum ETF drum. And I believe it was actually today that the publication, The Block, well-known crypto publication, The Block, posted that, they expect, or there's rumors that an Ethereum ETF will be approved by May. How much do you pay attention to that? How much do you think that matters? When we had James Seyfert on our show, he said he could see an Ethereum ETF being approved, but no other crypto assets, no Solana, nothing else for a long time. What do you think about the prospect of an Ethereum ETF?
I am not. I'm not opposed to it, right? First of all, but I don't think it's likely in 2024. Sorry, I don't think it's likely. And the only reason I say that is I think this ETF was done. It was really the Grayscale, legal decision that prompted this. Gary Gensler did not want to approve this. Elizabeth Warren did not want to approve this. So it got through, right? And sure. Larry Fink has no allegiance to Bitcoin, zero, right?
Yeah.
Let's be clear. They have an allegiance to making money, to fees, right? They would do an avalanche ETF if they could, right? I mean,
right.
They'll do a Cardano ETF. They do not care, right? They'll do a reverse, triple leverage Cardano ETF. Like they don't care, right? It doesn't matter, right? But I think that for Gary Gensler to come back and 100 days from now, and do an Ethereum ETF after he hasn't conclusively said that Ethereum is not a security. I just don't see that I think he's going to fight it as long as he can. Now, I think that, people have said, well, he's going to have to approve it. Well, he has to, but does he have to approve it in May? I don't think so. You know what I mean? I think he'll find some way to appeal, to force it out, to push the can down the road a little bit, So, are we going to get one? I have no idea, but I wouldn't count on it real quick. That's kind of my view.
Sure, totally fair.
And I agree. And beyond that, I really think that you've got some serious issues because, for example, the SEC has said that Solana is a security. They've said that. So hard to go from that to allowing an ETF to trade, I think.
Sure. No, I mean, you have to think so. And that's James Seyffert's position is you're not going to see a Solana ETF in 2024. You're probably not going to see it in 2025.
But I also do think that, the pitch for Ethereum or Solana or any of these things, right? The pitch to somebody in crypto is one thing. You can pitch that thing to a degen, no problem, right? But pitching that to a Wall Street investor is going to be is more difficult, right? Because I think the average Wall Street investor understands the argument that Bitcoin is digital gold. I don't think they're going to understand, well, there's Ethereum, there's this, roadmap, there's, there's the splurge, the purge, all this stuff. Like, I think that's just, people do not have the mental capacity to deal with that, to deal with that kind of scenario, and, I think again, I think people like Raoul Paul and stuff, they're getting a lot of views on their podcast for this, but I just do not think that, the Fred Krueger of old would be buying into the Ethereum ETF. I just don't think so. And I think there's so much view. The conventional view on Wall Street is you pick the number one, right? You pick the number one search engine. You don't pick the number two. You go for Google, right? You don't pick the number two.
Why not?
Right. I mean, I'm going to invest in Meta. I'm not going to invest in Noster. You know what I mean? Like, it's so. People will go for the number one. They're not so interested in number two. They're certainly not interested in this very complicated narrative that involves, some kind of technological upgrade, that's going to happen. So I just don't. I think the story is much, much worse for these other ones, for a financial player, than Bitcoin. I'm not saying it's bad. It's impossible, but I just think, if you look at the market cap of Bitcoin right now relative to Ethereum, it's, whatever, it's about 2.5 to 1, right? Or 2 to 1. Let's just say it's 2 to 1, right? I think that the Wall Streeters would value it at 5 to 1, or, you know what I mean? Like that I don't think they are going to view it the same way as the degens, right? Yeah, it looks a little bit more than 2 to 1, almost 3 to 1, really, right?
Yeah, exactly. And so I've seen you tweet and on different podcasts discuss the sort of the degen kind of mentality versus a Wall Street mentality. I find this absolutely fascinating. And I've experienced it myself, discussing Bitcoin on various podcasts, depending on the audience. Some people just don't want to hear it. I think actually because of unit bias, they just think that they can't afford it, even though Bitcoin is natively fractional. You can buy $1 of Bitcoin. It doesn't matter. And they'd rather take a swing on a Solana at $100, an Avalanche at $35, a new crypto asset as of the past 4 months at $2 or $1, I should say. And you're saying that Wall Street, they'd be more inclined to just pay up for the number one, right? How do you think about the kind of the price action in these different crypto assets? You talked about how Bitcoin really only kind of has these violent moves up, 15, 20, 25 days out of the whole year. So how could you ever trade that thing? How do you kind of frame all of the kind of price, frame these things from a price perspective and like sort of the Wall Street mentality versus the quote degen mentality?
Okay, well, look, I think that the opportunity on Wall Street is placing this in buy and hold portfolios and not portfolios that trade, right? So I think, most of these ETFs, even though ETFs do trade, and, actually they're trading quite a bit right now, right? So the volume of these ETFs is remarkable, right? It's remarkable. It's like 10% of Bitcoin's entire volume right now is on these ETFs, right? So Bitcoin's trading, $20 billion a day, and these, oh, sorry, it's trading. Yeah, it's trading about $20 and $2 billion a day is trading on these ETFs. So it's already approaching 10% of the exchange volume of Bitcoin, right? Which just tells you something, right? Because these guys have not even gotten going yet, right? But I will say that I do think a lot of this stuff is going to be placed into, portfolios that are rebalanced, once a month, maybe, and they're rebalanced according to formulas. Like, I'm going to put 2% of my net worth in Bitcoin. Okay, Bitcoin goes up, I'm going to sell a tiny bit, and I'm going to stay at 2%. Bitcoin goes down, I'm going to rebalance. I'm going to add a little bit more so I can get to 2%. Right? That's a sort of typical asset allocator model for how to approach something like Bitcoin. Right? And they're not going to be looking at the daily RSI chart, or any of these other, some channel or whatever technical analysis you're looking at. They're just not even going to look at that, right? So I definitely think that's kind of where I think most of the money is going to be parked. It's going to be parked in an asset allocation thing, which is like super, super bullish, right? Because this is, degens are always talking about their diamond hands, but with the diamond hands, there comes the total, 100x perpetual trade degen traders, right? So, and even the diamond hands, a lot of them completely panic because they have too much ownership, right? Like, that's the problem with Bitcoiners. The problem with Bitcoiners, you talk to the average Bitcoiners, they own no other asset other than Bitcoin, right? So they're like, yeah, I'm all in. Well, I'd say if you're completely all in, you're vulnerable, right? Because what's going to happen is Bitcoin's going to go down 50%, and all of a sudden you need to pay the rent. You just had a car accident. You need to buy a new car, something, right? And you're going to be a forced seller, right? Now, if you own 3 or 5% of your portfolios in Bitcoin, it goes down 50%. What do you care? It's like, great, you're down 0.5%, on your overall portfolio. It won't matter. So I think the average portfolio, the average sort of high net worth portfolio is pretty diversified. Yeah, they've got a lot of exposure to the U.S. stock market. But if they get involved in Bitcoin, it's not gonna sink or swim, kill them if it goes down. Whereas I think the average Bitcoiner, even despite all their, yeah, I'm never selling, actually they are going to sell when it goes down, and they do, right? So I think, a lot of the people who were saying I'm never going to sell in 2021, they're actually out of the market. So.
Yeah, I mean, if they were full-time investors or full-time traders, then they certainly ended up selling, right? Okay, well, very interesting stuff. I'd love to know the way that you're thinking about the Federal Reserve and how the Federal Reserve might approach 2024 and 2025. You tweeted that money printer is going to go Brrrr again after an article came out about Elizabeth Warren. I mean, the Fed declared that they were going to keep rates higher for longer, but then all of a sudden 2024 comes along, and the market is, I guess, smelling some weakness in the Fed. I'd love to know the way that you're thinking about the Fed.
I think that the way I look at the Fed is the math of running $34 trillion deficit debt and paying it at 5%. I can multiply 34 trillion by 5%, and I get almost $2 trillion a year just to pay the debt. That's just not going to work, right? That math doesn't work. So the only way you get the math to work is with lower interest rates. So I fundamentally think the permanent sort of state of interest rates are going forward are going to be low for the foreseeable future. And I think this whole higher for longer thing was just about as meaningful as inflation is transitory, right? I don't think either of those two things matter. I think we're going to go to lower interest rates, and if Trump gets in, we're going to go to zero interest rates. We may go to negative interest rates. Okay, so I think this whole idea of higher for longer and stuff is just nonsense. The Fed can't. The Fed may want this, but the Treasury and the Fed together cannot do this. So I'm in the camp that they don't care. They have no other option. And so they're going to lower interest rates. I mean, do I know they're going to lower them, next month? I don't know, I don't know, but I also don't think it's going to be, I don't think they're going to, I think this thing could impact the election. And they don't want to be too partisan, but at the same time, if they keep rates high, they're almost, the neutral thing would actually be to lower interest rates a little bit now, right? That would be the neutral thing. They don't have to lower them to zero, but lowering a percent or so, 1 or 2% in 2024, I think would be the kind of neutral. They could sort of view that as like, well, we're not influenced by the election, but we're not trying to tank the economy either, right? So I think we're going to see a lowering of interest rates, and I think even if it's not going to be enormous in 2024, I think the fact that we are on an interest rate decline, which we're going to be, is going to be massively bullish. And at the end of the day, you're going to be what matters is expectations of interest rates. And I think everybody's going to be looking forward to 2025. What are interest rates going to be like in 2025? And they're going to be low, right? So what that means is risk assets are going to be bid up. And, that's going to be good for equities longer term, I think. And it's going to be especially good for Bitcoin, right? Bitcoin will do very well in a low interest rate environment. But, look, I think it's not required for Bitcoin to do well. I think
clearly
Bitcoin
not, right?
Well. Yeah.
Right now, look at right now.
Well, I think we haven't seen anything. I've sort of said jokingly that I'm like, I have these like hyper bullish predictions, but I really believe it too. I do think I think Bitcoin has just vis-a-vis gold. I think you can look at it just vis-a-vis gold, and you don't need to go to all these other things. You don't need to bring in, collapse.
Quickly, Fred, just gold or just gold and silver? Like adding the silver market cap too.
I think this like silver is a different animal, and silver has all these industrial uses. Gold doesn't really, because people say gold jewelry. Now, I've thought of this. I've sort of thought of posting this. If you could have Bitcoin jewelry, I think it would do great. Like if I could wear somehow like a hat that said I own 1 Bitcoin on it, and it kind of had a QR code that you could scan, and it's like Fred has a hat, and he's wearing the 1 Bitcoin hat. People would buy that hat, right, to signal the fact that they own a Bitcoin, right? It's the same thing as like you're wearing some kind of Chanel bag or Prada bag, or in India, you have some big gold chain or something, or a rapper, right, has some big gold chain, right? So, like, to me, gold as a jewelry is the same as gold as a store of value. It's no different, right?
Fair.
Yeah. So I think gold has one thing, which is it stores money. That's what it stores. That's the value of gold, is it stores money. And I think Bitcoin is the same thing, except it's better. And it's a much, much better technology for storing value. And what that means is, I kind of use the horse and buggy versus car analogy. Both are fine ways to get around, but you want to get around faster, you use the car, So, I think we're going to see Bitcoin really take gold's place as the kind of, sovereign store of value. And I think that's going to happen in the next decade. And so I think we're going to get to, Bitcoin exceeding the market cap of gold, which is about $1 million, right? So I think we're going to get to $1 million. And I don't think you need any other argument other than that to get to Bitcoin $1 million. So you might just stop there, because that's all we need. We don't need, ordinals or, I'm not against any of that stuff. I'm pro ordinals, pro BRC20s, all this stuff. But we don't need any of that. Or do we not need Ethereum to work or anything? Just Bitcoin on its own could get to $1 million, just from the point of view of we have this totally decentralized, better version of gold.
And
And so,
that's just based on the math of gold's market cap versus Bitcoin's current market cap
yeah,
against the price of Bitcoin. And we know
that is
exactly how much Bitcoin is going to exist. So there's no kind of question mark there. Follow-up question. Do you think Bitcoin
yeah,
will be the next global reserve asset? And I'm listening. I'm just going to be off camera for one moment.
sure. Yeah. I mean, I don't think that Bitcoin is going to be the top, is going to be a global reserve asset in the next decade or two, right? So, will it be eventually? Maybe. But that really means that central banks are going to start buying Bitcoin. And, I think, I think that's going to take a while because, I think the central banks really, right now, they hate Bitcoin. This is funny money. This is just backed by nothing. So I think I don't see that in the next 10 years, but I don't think we don't need that, right? It's sort of not necessary for Bitcoin's ascent, right? And if Bitcoin gets to 1 million, I don't care how it gets there, right? It doesn't matter to me whether the ECB or the Fed, or it doesn't matter. We're getting there. We're going to get there because I think it's a great technology store of value, and it doesn't have any competition. That's the main thing, right? It doesn't have, it's not competing. Ethereum, Solana, and these things, they can't compete with Bitcoin in that sense, right?
No.
So that's the main prize here, right? The prize is, where do you store your money for the next 5 years, right?
For the next 100 years, if you're a pension fund, right?
Right. Okay, fine. But I've yet to meet a single person in my life who basically says, yeah, my retirement's stored in Solana. Have you met such a person? I have never met,
Well,
or like,
the DGen audience is different, Fred, but I know exactly what you're saying.
I've never met a person who's like, I mean, I've met lots of people who've said, I'm buying Solana for a little bit. And I've owned Solana at times, right? I'm not a huge crypto trader, but I have owned Solana at one point. But so people trade this stuff, but I've never met somebody who's like, I'm buying Solana for the next 3 years. I just never met that person,
And
or
actually,
any of these tokens.
and let's talk
ETH
about
maybe a little bit, but that's about it.
There are definitely believers that Ethereum there are people that legitimately think that Ethereum will replace Bitcoin as a store of value. I'm certainly not one of those people, but
Right, they're deluded. I mean, they're deluded because this is sort of the ultrasound money idea, right? Which is just an incredibly bad take on Bitcoin. So they just got very jealous of sound money, and they sort of said, "Well, we're going to make it. Ours is going to be more sound. It's going to be ultrasound." And the idea of that you can sort of change your issuance like that to make it more sound uh, is exactly why it's not sound, right?
right.
So if you can change your issuance to make it deflationary, well, then you can change your issuance to make it inflationary. Like, there's nothing sound about that at all, right?
Yeah. It's
Just
it's
like
like a project, not money.
yeah, it's like, so anyways, and nobody, there is no, that's just not going to really flow. Nobody outside of the uh, bankless echo chamber, these guys are just they're clueless. That's what they should be called, not bankless, but clueless is a better name for them. But once you get outside of that echo chamber, no rational human being is going to be like, wait a second, they just changed it so that it's deflationary. Okay, great. How long has that been? About a year. Okay, great. So what about before? Well, they had a completely different system and then they changed it. Like, no, like
Yeah.
it doesn't pass the sniff test. So I just don't think that there's that's even remotely uh, can exist as a store of value. So I think Bitcoin's completely on its own there, and you really have to guess. Do we need a digital store of value? Like this, or maybe is gold enough? And I don't think gold's enough. Gold was great. 20 years ago, if you told me that something like Bitcoin could exist 20 years ago, I would say, no, it cannot exist, right? Like what Satoshi did was absolutely,
A marvel of it, like a breakthrough, like the combustion engine, right?
It was a breakthrough like E equals MC squared. I mean, it's sort of like, it was not clear that you could do it, right? Like just, not clear, that you can take the energy out of an atom and turn it into, electricity. Like, who knew,
Well, exactly. And I was going to say, you're talking about just, the gold narrative or just Bitcoin's market cap, equaling gold's. I also think about proof of work architecture and just how important it is for energy utilization and like efficiency, for the global energy situation compared to what we have now. Like I feel like when people wake up to this, and they realize, I mean, I saw there's a clip going around right now with Safety Amos, the author of the Bitcoin Standard. He's talking to that guy, Jordan Peterson, and you're watching Jordan Peterson's mind just get blown as he kind of starts to think through how efficient the proof of work system actually is for energy.
I'll tell you something really funny, a very funny anecdote. Okay. Proof of work was originally created by a friend of mine.
Really?
I'm not kidding. Okay. So proof of work was created by my friend, Cynthia Dwork. And she created it in 1992. And she created it. She was at IBM Research. Now she's at Harvard University as professor of computer science. But she created this idea of stopping spam email with proof of work. That idea was then taken over by Adam Back in Hashcash, right? And then it was incorporated in BitGold, right? And finally, it was incorporated into and then to RPOW, which is Hal Finney's project, and then finally made it into Bitcoin, right? So the idea of proof of work was my friend created it. And I remember her telling me about it in like 1995. And she's like, and I'm like, well, what kind of stuff have you been doing? And she's like, yeah, I got this paper on proof of work. It came up with a couple of years ago. And I'm like, let me see that thing. And she goes, yeah, I think it could be used. I don't know. Like it was an idea. And I was like, nah, it's never going to amount to anything, Cynthia. And so that idea of proof of work, it was a sleeper idea for years and years and years, but you're right. I mean, it has tremendous implications for energy as well, right? And, for the grid and everything else. But, it's a seminal, Bitcoin is a seminal idea. It was just an absolute seminal idea. And I view it as almost like a mathematical discovery. If you've ever done work, I did work in math and proved things in math that nobody had come up with,
That's how you get a PhD in
not
math,
as important as Satoshi's discovery. But when you prove something in math, there's a sense that you're uncovering it or discovering it, like you're taking a rock and you're looking at it and you go, oh, there's something underneath that rock, right? And so I feel like Bitcoin, it's really a discovery in that sense. It's sort of the canonical form of what, this thing must look like. And, Adam Back said this in a video, which resonated with me a lot. He said, he goes, I'm pretty technical. And when I saw Bitcoin, I sort of spent 2 months trying to fix it and make it, improve it and make a better version. And he goes, and then I realized you actually couldn't make a better version, and so it's just that's the discovery, if you could change a few things here or there, you could say it's not 21 million coins. You could change the halvening to every year or every 6 months. It doesn't matter, right? There's lots of different ways you can do it, but the fundamental form of what that is like that's the way you solve money. And that was solved in 2008. And we're just coming to grips with what that means as a species, that we figured out a way to have this money that does not depend on any committee. It doesn't depend on any trusted third party. It doesn't depend on Satoshi or anybody else, right? And everything else, all these other things, they're a little bit like committee coins, right? They all kind of have, Vitalik or somebody, some
human.
guru. some human, you know, and that human is kind of like spearheading the direction. And, you know, and I think, you know, Bitcoin is, you know, there's some tweaks that could be done to make it better. I'm not opposed to them, you know, but the fundamental algorithm hasn't changed one iota since it was laid down in that white paper. And so, you know, I definitely think it has massive legs. And, you know, we're sitting here in 2024 and you're going to come back in 2034 and 2024 is going to look like 2014. You know what I mean? People are going to be, God damn, man, I could have bought Bitcoin at, you know, 43,000, man. Wow. Back in the 5-digit era, you know, like Jesus, before it hit 1 million, you know, and I really feel like that's the case. So, you know, I think, you know, everybody's like, well, when's it going to hit 1 million or when's it going to hit well, look, you got to be a little patient too. You know, I've owned physical gold for 30 years, you know, I've had gold bars 30 years and they've gone up 7 times in 30 years. You know?
Well,
so,
and I was going to say there's issues with gold, right? Because there is a certain degree of human hands getting involved with it, with the mining and you know, corruption from financial institutions and the ETFs with gold's. JP Morgan Chase has paid billions in fines for manipulating the price of gold. Kind of a lot going on there. We don't have to necessarily dive in. Yeah. You know, so real quick, you were talking about the difference between Bitcoin and these other crypto assets. One thing I'd wonder about, so while you know, you look at the last cycle, obviously Bitcoin's still Bitcoin. Ethereum's had a bunch of, you know, things that have happened to it, like you've kind of talked about, but Ethereum did outperform Bitcoin from the bottom to the top of the last cycle. I wonder, do you think Solana and these other crypto assets will actually outperform Bitcoin this cycle too? Or do you think because of the insertion of TradFi via the ETF, you have a totally different scenario where Bitcoin's, you know, the king again in terms of short-term price appreciation, which ultimately doesn't matter, but the traders care about?
You know, short-term, anything can happen. So, you know, I think the you know, I read this great book and I quoted this thing. I can't even remember which book. I think it was, you know, it was a book about, it was a book by Michael Levy about the founding of Oppenheimer. And Levy says he was obsessed with John Paul Getty. And John Paul Getty was the richest man in the world in 1960, right? So he was the richest man for a long time, right? For like 40 years.
Over in Los Angeles, you can go to his estate, right?
You can go to his estate, right? And actually, he was the first billionaire after Rockefeller. So basically, Rockefeller made $1 billion in like 1905, right? And then you had to wait 55 years for another person to make $1 billion. That was Getty, right? And the way Getty made his billion is he focused on one asset, which was this oil company called Tidewater Oil, right? And he was like eagle eyes on that asset, right? And he was stacking Tidewater, you know, and he was just, every time he got a little chance, he'd stack some more Tidewater, right? And eventually he got a controlling share position in Tidewater, and he renamed it Getty Oil. And Getty Oil was the only independent that was privately owned, right? So everything else was like Exxon, you know, it wasn't Exxon, it was Standard Oil at that time, right? But it was, you know, these conglomerates, these public companies, but he owned personally Tidewater Oil, right? Getty Oil. So that's what made him the richest man in the world. So, you know, I think there's a lot of shiny objects there, you know, there's a lot of things that are cool, like cool stories, you know, Solana, whatever. I don't care. I think that and look, I think the hard thing is just doing nothing and just owning Bitcoin. That's the hard thing, right? So, you know, if people want to get a little bit of fun and play around in these other coins, I have no problem with it. But I do think they are distractions, right? Because I think just like Getty going after Tidewater, right? I think the goal here is to get as much Bitcoin as you can. That's the goal, right? Now, could Ethereum outperform? Sure, it could. I mean, you know, who knows, right? Could Avalanche or some other coin, or, you know, there's a new AI coin now called Tau, right? You know, a friend of mine, Mark Jeffries, has been talking about it. Interesting. I mean, certainly interesting. You know, AI is hot. These guys have a kind of an interesting take on rewarding people for coming up with new innovations. And by the way, in that coin, there's 21 million coins too, right? So
Look at that.
Yeah. So yeah. So there's, it's there's always an interesting story, but I think you have to focus if you're going to want to make a lot of money here. You're going to have to focus on more than 1 year and more than one story. You're going to have to focus on holding something for 4 to 5 to maybe even 10 years, right? And if you're going to focus on that, I would say the only thing that you need to focus on is Bitcoin, and you have to figure out, how am I going to get more Bitcoin? What's going to be the way I can get more Bitcoin? That's it. That's it.
Literally.
Literally, that's the goal, right? Is to stack more. Now, if somehow you see a great opportunity in Ethereum and you can buy some and some calls on ETH or whatever it is, or maybe whatever you're doing, maybe you sell a company or do something, right? All of a sudden you have some liquidity, plop it into Bitcoin,
What else are you going to plop it into?
Take your liquidity, buy more Bitcoin. That's kind of what I think the secret here is, is going to be for the next thing. And then that's part of it. And the other part is, don't sell your Bitcoin.
Exactly.
Like, people are like, Fred, when are you going to sell? I'm like, I'm not going to sell my Bitcoin in 2024. It's just not happening. There's no scenario in which I sell my Bitcoin in 2024. Zero.
Right.
Yeah. There's no possibility. I would say maybe there's a possibility I sell it towards the end of 2025. Some of it, you know what I mean? But just as a time-based thing, you've got all these Wall Street's coming into Bitcoin. You have so many good things happening right now with Bitcoin. Give it a couple of years, give it a couple of years. Just put a time lock on that sell thing. Do not trade your Bitcoin. And, if you trade, and as I sort of said, if you sell your Bitcoin, you are kidding yourself if you think you're going to be buying your Bitcoin back again. But you won't. Because what's going to happen is you're going to sell your Bitcoin. Scenario one, Bitcoin goes down. You know what you're going to be? You're going to be like, oh my God, oh man, I missed that one. That was great, and you're going to watch it go down. And then some point where it's supposed to do nothing, all of a sudden it's going to be back up. And you're going to be like, okay. Now,
so you're going to buy it back for what you sold it for?
Or higher? No. That would require you acknowledging that you made a mistake, which we don't like to do as human beings, right? We like to think of ourselves as super smart people, always doing the right thing. So I would say that the chance of you actually buying it back, for higher is low. You're not going to do it. It requires you saying, I screwed up. And, or then you might get really cute and start buying calls or doing something. Again, you're going to screw up, right? It's, so if you sell it and it goes back down and it goes back up, you're not buying it. So I think it's a really dangerous thing to even entertain the idea that you're going to sell it. The only case I would say to sell it is if you really are going to call Bitcoin quits. You're going to be, okay, that's it. I got enough. I'm walking away from the table. I'm never going back to the poker table again. Okay, here I'm cashing out my chips. I'm never going back. And that I feel like is an okay thing, right? Just saying, that's it. I'm going to call. I got enough chips. I'm leaving the casino.
You're moving on.
I'm moving on to something else. You know what I mean? And, I think that, and that might be your age, right? I had one of my followers said, I said, if you're 80 years old, I don't know if you're going to get, Bitcoin's getting to 1 million. I don't know if you're going to be along for the ride. You know what I mean? And he's like, yeah, I don't think I can beat that race. You know what I mean?
Yeah.
It
makes sense.
50 years old. Yeah. I mean, if you're 50 years old, you're going to see that thing at 1 million,
Oh yeah.
If you're 30 years old, you have you're an idiot. That's all I can say. if you're 30 years old and you're selling your Bitcoin and you're trading it, you deserve to be poor. You know, I mean, you're given this huge opportunity, and yet you sell it. You know, like I have no pity on you. You know what I mean? Zero.
So I'm 33 years old, Fred. I've never sold my Bitcoin. I've only bought it. And I know that I just can't figure out a situation where I'd sell it. But at the same time, I would like to take advantage of cyclical, opportunities for liquidity. So my solution that I came up with is I don't only buy Bitcoin early in the cycles. I'll buy the Solanas of the world, not Ethereum really, some Avalanche, right? With the intention of selling all of it after a certain level of appreciation to accumulate more Bitcoin, not selling the Bitcoin.
Yeah, I understand, but I would say probably your ability to time that thing is less than if you just didn't do that and just bought the Bitcoin.
Just bought the Bitcoin.
I mean, I'm just being honest, like I know you think of yourself as this great timer of Solana versus Bitcoin, but reality is you probably aren't. And, Bitcoin starts moving way ahead. Your Solana may not catch up. And all of a sudden, you're going to find yourself like rooting for Solana against Bitcoin now. You know what I mean? Like, I just think it's taken me a long time, 30 years in the markets to realize my limitations, as a human being, as a trader. And I do not believe that I can time Bitcoin. I do not have an idea. I don't think I can do it because it's. You said 20 days. I think it's more like 10 days. If you miss those 10 days, you're not making any money. And those 10 days, they aren't the 5 days before those 10 days. The market's not doing anything. So you can't even look at the market and it's doing this, it's doing that, even it's going down a little bit. And you're like, what the hell? I'm going to get out of this thing. And then it's bam. That's the way Bitcoin works, right? So completely unpredictable. And, if you realize that it's unpredictable, and you accept that, you're like, okay, what is the possibility of me trading this thing? Well, I'm not going to trade it. I will not trade this thing well. So what should I do? What I should do is put all my money in Bitcoin. That's what I should do. If I'm 33 like you, I'm putting 100% of my money in Bitcoin. I'm not even like, I don't save another dollar outside of Bitcoin. That's the only thing I do is put my money in Bitcoin. And it's a very simple decision. That money is never being sold. You can start considering taking that money out of Bitcoin when you're 40 years old. That's it. That's your 40-year. Don't borrow against it. Don't trade it. Don't try to be cute with Solana or whatever other thing comes around. Just put that thing in the vault and come back in 10 years. That's it. That's what you should do. And yeah, that's really tough. That's incredibly tough. And, you're probably going to have some massive drawdowns, but you're going to get paid for those drawdowns. Look, I mean, I watched, I got a crap load of Bitcoin, right? Now I know I have a crap load of Bitcoin because I know the distribution of Bitcoin, right? I know how many people, there's only 10,000 people who have more than 100 Bitcoin.
That's insane. Or 10,000 wallets.
10,000 wallet addresses, like 14,000, but some of them are dupes. Like I would say there's under 10,000 people who have 100 Bitcoin. I've got a lot more than 100 Bitcoin, okay? A lot more, okay? So now when you have that amount of Bitcoin and Bitcoin goes from 69,000 to 16,000,
That's a gnarly move. Like there's a gap move there.
Did I care? Not at all. Zero. And the reason I didn't care is I have a lot of other money. How real estate? I got all the toys, right? But I don't care. Like it doesn't bother me, right? But if I definitely think that holding throughout the entire 2021 cycle, the 2020 cycle, was the right move. Entire cycle I held, right? And I think it was the right move. And I have no, I don't think I should have sold at 67,000. I don't. I think that was not the right move, tax wise and everything else. It wasn't the right move. And you have to learn, I would say, try to learn to not do it. And I got to tell you, one of the things that really kills me about people your age is a lot of them are like, well, Fred, you had such a, you boomers had such a good time with houses, right? You bought your house, you bought your dad, or the average person, you guys bought these houses in the 70s for like 10 grand or 20 grand, like they're so expensive now. But yet you've got this other asset that's going to do far better than housing, Bitcoin.
Way better.
And you're not applying that same logic with Bitcoin.
And you can buy $1 of it. You don't have to have a down payment for Bitcoin.
Yeah. And you don't have to go house shopping, find the perfect house. You just buy Bitcoin. It's fungible, right? So you're sitting in front of the best opportunity. I didn't have Bitcoin, okay, when I was 30 years old. Didn't exist, right? So you've got this perfect instrument, this perfect investment, and yet you guys are bitching about house prices. No, you should not be bitching about house prices. Like, you know what? Just fucking rent. Excuse my French. You should just rent, okay? Rent. Why? Why do you want to buy real estate when you can buy Bitcoin? You're retarded?
It's true.
Like, there's no reason to buy real estate. There's like zero reason. Lock in a 30-year mortgage at 5% and buy real estate? Like, are you crazy? Like, it's like, no, you should live in a 1-bedroom apartment. If you have a kid, maybe make it a 2-bedroom. Great. But, do not buy real estate. Save your money in Bitcoin. That's the trade. Okay.
Okay.
It's simple. It's like the question is, can you take the medicine,
I agree with you, and I've been taking the medicine, and but
you've also added a little Solana medicine in there, so I'm not like the doctor is not happy with my recommendation to you is cut out the Solana a little bit, increase the Bitcoin exercise a little bit,
You're not wrong. You're not wrong. And if I sell the Solana that I'm up, the Solana's gone up by a higher percentage, but if I sell it now, I'm going to have all those taxes, right? And that's what you're talking about. So it's like, well, then I have to pay the taxes on those. I can put it into Bitcoin, but I actually kind of lost money on the deal. So I know exactly what you mean. That's something I have to figure out.
That's what the ETF's for. Okay. So you take your tax loss, right? Take your tax hit right now. Okay. Take your tax hit, park it in the ETF.
Well, I would buy just Bitcoin, right? Why would I buy the ETF over Bitcoin?
It is better.
The ETF is better?
Yeah. Look, trust me, I'm an ETF maximalist. I'm not a Bitcoin maximalist, okay? So you want to own IBIT right now with your money, not Bitcoin itself. So
that's a hot take, Fred. I feel like a lot of the guests on this show would take the other side of that one. So only actual.
They're not smart. That's what the problem is. Your guests are not smart. Okay. And I want to tell you that
we've had Eric Voorhees on this show.
I know. I understand that. Voorhees, look, I get it. I understand where these guys are coming from. And look, there's, I think that the best way to hold Bitcoin as of 2 weeks ago has been in one of these is literally the BlackRock ETF. That's your best bet. That's your best way to hold Bitcoin. And I'll say there's probably 4 reasons why I say it beats Bitcoin. Okay. The first reason is that it, from a tax standpoint, at some point you're going to have a pretty significant tax bill, right? Your tax bill it may hurt right now, but when you start paying somebody a 7-figure tax bill, okay, as I've done multiple times in my career, right? 7 figures, IRS, here's $2 million IRS, you know what I mean? Kind of deal. You're going to want to have the best tax treatment possible. Okay. Now, ETF, very, very clean tax treatment. Okay. Now, have you ever been audited by the IRS?
I've not.
Okay. Do you like having a colon exam?
I don't, Fred.
Because that's what you're about to get with your Bitcoin cold storage wallet. Okay. You're going to have some auditor come in there and they'll be like, I'd like to understand exactly every single transaction that led up to this Bitcoin from probably start from the beginning. And I need it down to the Satoshi. I need to understand every record from every single transaction that you've had, right? And so
that's
your
going to be a big
audits,
pain.
It's going to be such a pain. You're not even going to be able to do it, which means you're going to automatically pay penalties. Okay. So now if you have it on the ETF, that's no problem, right? Just like anything else. Oh, here it is. Oh, it went up 10x. Great. I've held it for more than a year. Boom. That's my payment, right? So taxation, so much better, right? There's no question. Okay. Audit, IRS audit, so much better. Okay. You may want to pass this thing on to your kids. You're not planning on dying, right? But you might get hit by a bus, your will and stuff. Much easier than, here, honey, here's my seed phrase, much better, right? So legacy planning, much, much better. Your keys, yeah, you got your system, whatever your system is, but whatever your system is, I can guarantee you that there's problems with it. There's problems with it, You use Ledger, they come in, there's some Ledger hack, you know what I mean? Use multi-sig, there's other problems, right? So do you want to manage your keys yourself, or do you want to have BlackRock manage your keys? I personally want BlackRock to manage my keys. Personally, that's my personal preference. I think they're going to do a better job. There's less risk of my losing my thing. Now, I still like having some Bitcoin,
like actual self-custodied Bitcoin.
Yeah, I think having some is good, right? I think having some physical gold is good, right? I recommend it, if we do end up in Mad Max Beyond Thunderdome, and I need to take some gold coins, to the local warlord. Yeah,
Makes sense.
It makes sense, right? But this is like I don't think you're going to need this with the majority of your Bitcoin. I don't think you're going to need the idea that you're going to be living in this kind of, anarchical world where, it's just you and your treasure, walking the streets of wherever you are. Where are you, by the way?
I'm in New York City. And so,
okay, so walking the streets of New York City, like burning cars on the left, and you're there with your treasure, and you need to buy a little gasoline, so yeah, exactly. You're gonna buy some gas from the guy with like Lightning Wallet, and the guy's gonna give you the gas. Like that scenario, I don't think that scenario is happening personally, but if it does, keep some on hand for if that happens, right?
okay,
But
so Fred, this has been electric. I want to be mindful of your time.
Yeah.
Two last quick questions.
Yeah.
I think I know the answer to both, but I want to ask them anyway. In your mind, is there any reason to own Coinbase or MicroStrategy? Let's say in an IRA or something, like you have to buy equities, in the account. Is there any reason to buy Coinbase or MicroStrategy over the ETF?
Zero. I'm especially bearish on MicroStrategy because look, the problem with MicroStrategy is they're kind of like this software company of dubious quality, and a bunch of Bitcoin, right? Now the problem is, take the software company out of the picture, ascribe it some nominal value, and then the question is, do you want to own a bunch of Bitcoin that is in a closed structure, right? Well, we had that. That was called GBTC. It traded down to 45% discount, right? And if you think that can't happen in MicroStrategy, you're mistaken, because I think it absolutely could happen. Like, look at Bitwise, BITW, right? That thing's trading at a 40% discount right now. Yeah, right now. You can buy it right now at a 40% discount. 500 million AUM trading at 40% discount. Now, it might be a good buy at 40% discount, but like the fact that it's there is kind of it's a little disturbing, right? So I think there's no reason to own MicroStrategy. Coinbase, you know, I'm a little less interested in, because I just, their entire business model is trying to get people to do a ton of trading between all these different coins. I don't see that as like, it's not really to me a great model going forward. Now they have a custody model for a lot of these ETFs now, but look, they're going to have a lot of competition for that too. These guys all pick Coinbase because they could get their ETFs approved. But now they're going to come back and they're going to say, the money that we're paying you for that, those 10 basis point fees, we want 5. And it's non-negotiable. Either 5 or I'm going, Fidelity's offering me, Fidelity Custody is going to offer for 5 basis points. You know what I mean? So those fees are just going to go get crushed. And so I think it's not a great idea. And last thing I would say is I would avoid the miners for the same reason, right? Like no need to be cute with owning miners or anything else. Right now, it's like you have such a clean vehicle. You have this Bitcoin ETF, it's the cleanest possible vehicle. Like, just buy the ETF. BlackRock is the largest asset manager in the world. Your ETF's good. This thing's going to be good. It's super liquid. It's super safe. Run by BlackRock. You don't need to try to be cute here. That's it. So I really, I'm sort of a maxi, but I'm really, almost monotheist, right? Like I think that just one substance here, Bitcoin, that's going to carry you over the next 5-10 years. And that's it. That's all you need to do. And now the rest of it is just giving us the conviction to just stick with our ideas and not get distracted. And that's what I would like to try to, to convince. I'm sort of like, I view myself as like one of these apostles, of Christ, Satoshi is, like Jesus, and I'm, Paul the apostle. And I'm basically going around telling people of Christianity, you know what I mean? And if I can do that a little bit and convince people of this, I think, I think it will benefit me, because, and I think if enough people can do that, I think it will, spread the word. It's all about spreading the word about why this is going to be a great asset over the next couple of years. And so hopefully I've tried to convince you that,
I didn't think I needed any convincing, but I love the kind of hardcore approach from you, Fred. Fred, you were one of the most fun guests we've ever had on this show. Ladies and gentlemen in the audience, follow @Krueger, @DOTKRUEGER. That's Fred Krueger on Twitter. Fred, anywhere else we should send these people? Any website or anywhere you want to send them? No, just to Twitter?
No, just follow me on Twitter. And, look, it's kind of a lighthearted thing. I'm trying to make it a little bit of fun, but, the only place else I would say is I would say check out BlackRock.com and look for IBIT. It was on the front page. I'm not sure if it's still there, but I think that I would really look at the actual IBIT page on BlackRock because it's good. And, there's a bunch of other ones I would also look at. I would look at ARK. I would look at Bitwise. And I look at Fidelity. They have some great research as well. But those are the 4 that I would sort of say, if you're gonna play around, you're gonna want to pick one of the 4. I actually, just for fun, bought every single one. But you know, I really think this BlackRock page is great. It's just good. The arguments are great. The research is great. You know, I think this is good. I think, you know, and I think everybody should look on the other side of the fence. You know, Wall Street they're not stupid, you know. And so, you know, and as I said, I'm a Bitcoiner now, but I love my old world. I love Wall Street. So I'm rooting for BlackRock as well. So, you know, contrary to the Voorhees of the world, maybe I really do think that this will be a great thing for everybody to be able to buy this stuff and put it in their portfolios. It's going to be great. So, you know, so I hope I've been somewhat useful to you guys.
It was absolutely electric, Fred. We really appreciate you coming on. We hope you'll do it again, you know, maybe on our morning show too in the future, but we'll let you go. We want to be mindful of your time. Okay. And just heads up. Yeah. If you stay on, the mic is going to be hot while I'm playing this music. So the mics are still hot. Just letting you know. Thank you so much, Fred. I'll catch you next.